gold were 4,300 and we divide by 7 what it's coming out of the ground at, well, that's $614. Take 4,300 and divide it by 42, where since the Industrial Revolution, that's been about the average price where gold was money and silver was industrial, which is still 7 times higher than it's coming out of the ground at. That's $102. Now, I want to tell you from a standpoint, non-biased, you take a 45-year cup and handle. Technical analysis would say the following: when you have the top of the cup at $50 in 1980 and the bottom of the cup at about $4 in the early 90s, the difference between the two is $46. You add it to the top of the cup when it breaks through. 50 plus 46 is $96. That would be technically before you would even reevaluate where the cup and handle formation would say you're going. I think, and I hate making price predictions, but I will tell you $100 silver to me is still undervalued. And it is. It's undervalued geologically, mathematically, and from a standpoint of a depleting asset that has plurality in uses.
We're accumulating silver, and I'm expecting at minimum a 20 to 1 ratio of silver to gold, but probably 10, which means you can still outperform gold by about a factor of 7 times. That is huge, especially if gold doubles, triples, quadruples times 7.
Most people still think silver is just an industrial metal, something that goes up and down with the economy, solar panels, or electronics. But what if that entire assumption is about to break? Right now, silver is quietly transitioning from a secondary industrial commodity into a core monetary and strategic asset, and almost no one is positioned for it. The valuation gap between gold and silver has reached levels that, historically, do not persist. When you measure silver against geological supply ratios, thousands of years of pricing history, and modern technical structures, one thing becomes clear. Silver is not just undervalued, it is structurally mispriced. Veteran physical metals strategist Andy Schectman and monetary historian Mike Maloney argue that this cycle is fundamentally different from past rallies. This isn't speculation. This is about depletion, remonetization, supply constraints, and a global system quietly preparing for something much bigger. And if they're right, the price levels most people think are extreme may actually be conservative. Let's break it down.
Gold were 4,300 and we divide by 7 what it's coming out of the ground at, well, that's $614. If we take 4,300 and divide it by 42, which really since the Industrial Revolution has been, we'll call it man's price. Mm-hmm. For 5,000 years, the price and the geologic ratio were linked at about 6. Even Sir Isaac Newton did that a couple hundred years ago when he figured out the rate relationship for the mint. Go back to Roman times, it was roughly 12 to 1. It was 1 to 1 in biblical, but geologically always been 16 to 1. We take 4,300 and divide it by 42, where since the Industrial Revolution, that's been about the average price where gold was money and silver was industrial, which is still 7 times higher than it's coming out of the ground at. That's $102. Now, I want to tell you from a standpoint, non-biased, you take a 45-year cup and handle. Technical analysis would say the following: when you have the top of the cup at $50 in 1980 and the bottom of the cup at about $4 in the early 90s, the difference between the two is $46. You add it to the top of the cup when it breaks through. 50 plus 46 is $96. That would be technically before you would even reevaluate where the cup and handle formation would say you're going. I think, and I hate making price predictions, but I will tell you $100 silver to me is still undervalued. And it is. It's undervalued geologically, mathematically, and from a standpoint of a depleting asset that has plurality in uses. Like, how many commodities have uses that expand past one use? This is in so many areas, monetarily, militarily, industrial, and all sorts of capacities, from solar panels to batteries to water purification. All of these things, right, medically, it has plurality in use. And so I think, I think $100 is certainly a big round number. And Keith Neumeier started that many years ago. Triple-digit silver, and I remember when he sent me a shirt for Christmas present, I loved it, and I still wear it, and then I made the same shirts myself. I didn't really sell them because I felt bad about copying. If I made them, say, Miles Franklin triple-digit silver for my staff, I think it's coming, and it's not weird to say it. Look, let me put it this way. If you woke up tomorrow morning and gold was $600 or silver was $600, well, it wouldn't be so far out of line, because that is the geologic ratio, right? And it's a depleting asset. So if you're mining 7 ounces of silver for every 1 ounce of gold, is it really wrong to think that that has to link up at some point? I don't know. I think higher than people think, I will simply say. And I don't think it'll be much into 2026 before we start to see those kind of prices. If I were to guess, just to guess, don't hold it again, and it is the neutral asset that seems to have been chosen to lead the remonetization or the reintegration of new monetary policy. And in the United States, I honestly, truly do believe that it will have something to do with the back end of the Treasury market, as Judy Shelton has talked about. Whatever it is, whoever's importing all of this gold believes it to be very important. So yes, with all the state legislation, with all of the move to the global south of it replacing the Treasury, in essence, with all of the imports here by the most well-informed and wealthiest clients or traders in the world, something big will happen. And I think it will happen sooner than that, to be honest with you. But yes, I do. I don't know to what degree or how it looks, but something bigger than the mainstream would lead you to.
We're accumulating silver, and I'm expecting at minimum a 20 to 1 ratio of silver to gold, but probably 10, which means you can still outperform gold by about a factor of 7 times. That is huge, especially if gold doubles, triples, quadruples times 7.
Silver is increasingly shifting from a secondary industrial metal into a monetary and strategic asset. And when compared to gold, the disconnect in valuation is impossible to ignore. Geologically, silver is mined at roughly 7 ounces for every 1 ounce of gold. If gold is trading near $4,300, a pure production ratio valuation alone implies silver near $614. Even using a more conservative historical framework, the average gold-to-silver price ratio since the Industrial Revolution, silver still prices near $100. That alone highlights how distorted current pricing is. From a technical perspective, silver has formed a multi-decade cup and handle pattern stretching back over 45 years. The high was near $50 in 1980, the low around $4 in the early 1990s, a $46 range. When that structure resolves, classical technical analysis projects an initial move toward $90 to $100 silver, just as a starting point. And even at $100, silver remains undervalued.
Why?
Because silver is a depleting asset with expanding demand. It's used monetarily, industrially, medically, militarily, and strategically, from solar panels and batteries to water purification, electronics, and defense systems. Few commodities serve this many critical roles simultaneously. At the same time, silver supply is constrained. Most silver is mined as a byproduct, not as a primary metal, meaning production does not easily scale with price. Meanwhile, governments are quietly reversing decades of policy mistakes. They once dismantled strategic silver stockpiles, assuming silver was obsolete. Now they're realizing that you cannot conduct modern warfare, electrification, or a technology race without silver. Central banks are already accumulating gold aggressively, not for yield, but for survivability in a world facing cyber risk, sanctions, and digital fragility. Silver is now being reassessed as collateral, reserve support, and a strategic necessity alongside gold. This is not a short-term trade. It's a long-cycle mean reversion driven by depletion, remonetization, and global realignment. And historically, when these forces converge, silver doesn't just follow gold. It outperforms it.
Central banks are starting to accumulate silver, that it has started. That silver is going to be added to gold as a reserve asset, a collateral. And so some of this is absolutely true. You know, the U.S. used to have the world's largest silver stockpile, the Strategic Silver Reserve, and then they got rid of it. And most governments got rid of it. After, we went on the international gold standard, silver started to become demonetized, was relegated to coinage and some small promissory notes, silver certificates, and then totally abandoned. And then they liquidated the strategic stockpile that was for war and everything else. And now they're realizing, oh, we made a mistake. And so they've got to accumulate again, because you cannot conduct warfare. You cannot, we're in a technology race right now with China, and you cannot conduct a technology race without silver. There's just so many things that where silver is absolutely required and gold is not. That would be like a secondary option to silver with the conductivity and everything. And then all of the industry that relies on silver, practically everything has some silver in it. Gold has been rising for a while. People are concerned about the economy. A lot of this is investors. So silver is starting to act once again like money. People are protecting themselves with it, and they are making gains with it. And the solar panels as a proxy for industry, batteries, I've been driving electric cars now since my first Tesla was a 2010 Roadster. My second was a 2011 Roadster. Then I had the 599th Model S off the line in 2012. And I know electric cars are superior. And I used to give people rides in 2012 and 2013 and saying, you just know in 20 years that 80% of the cars being made are going to be electric. And the people that sort of pulled out of the electric race, the companies, they're going to end up dying. They absolutely are. I'm going to get a lot of flack in the comments from this, but they absolutely are superior. There's just absolutely no comparison. And when I drive an internal combustion vehicle, it feels broken. But the demand that this places on silver is incredible. A worldwide shift to our transportation infrastructure being made up of mostly electric vehicles. This is absolutely enormous, and we do not mine enough silver. And so the fundamental supply-demand imbalance is one of the big drivers here.
Central banks have been net buyers of gold for 14 consecutive months year to date. The National Bank of Poland leads the official purchases with about just under 100 tons. And it's interesting, the guy that runs their bank, his name is Adam Glapinski. And I'm going to do this from memory. It'll be paraphrasing. It's close. They asked him not too long ago, why do you own gold? Why are you buying so much? They've been buying more than anybody. He says something to the extent, think about this from a standpoint of AI, of Bitcoin, of everything that's digitized. And it's weird to hear a central banker say this. He says, we live in a world where a digital world where all of the accounting records are held digitally. And when someone shuts off the power to the global monetary system, we hold gold so that we can rebuild our monetary system free from that interference. Something to that extent, where he more or less said, if someone were to shut off the electronic system, like an EMP or some sort of a hack or whatever it was, with quantum computing, where the new Google Willow chip, by the way, which is a prototype, but if you read about it, Google Willow chip, they made it. It does in 5 minutes what the world's fastest supercomputers do in 10 septillion years. I didn't know what septillion was. It's like 10 to the 25th power. The level of computing and quantum computing is such that anything alphanumeric is in trouble. JP Morgan spends $1 billion a year as it is on IT and fraud protection. What's going to happen when you get that kind of, anyway? So yes, they've been buying a ton of gold. Bank of China has increased its gold holdings to 28% from 21% last year. So, they've moved up 7% in a year. That's a huge shift, right? And it went on to, this article I was reading said, because gold has appreciated against all major currencies so much that the effective mark-to-market share of global reserves was at 20 at the beginning of the year. It's now at 30% of central banks. It's the number 2 holding on all central banks. And one last thing I wanted to read you that I thought, it's a paragraph, and then I'll say goodbye or answer any other questions. This was from a man named Paratik, Pratik. Paratik? Gansham. I can't pronounce his name, but he's part of the IMF. He says, gold has outlasted empires, crises, and currency regimes in an era of digital assets. Its staying power reflects not just geology, but psychology. And I think that to hear an official at the IMF say these kind of things, it's becoming more mainstream. Little by little by little, it's being integrated quietly. And the big money is positioning quietly before any of the other people know about. You all do. I scream about it over and over and over again. Please look at what the big money is doing, not what the so-called experts are saying. And I think gold is becoming also, just like silver, very, very, very important to global monetary state. That's all I have. One of the unique characteristics is that for the last since the end of World War II, gold has been held at the Bank of England and the New York Fed. That was, mostly the New York Fed first, and then, well, of course, Bank of England too, because of the roles of COMEX and the LBMA. And that's changing. You have all of these countries that are repatriating their metal from the LBMA and from the COMEX and taking physical possession to remove counterparty risk. And this is even a bigger deal where it's no longer about a unipolar system. That's what I think is truly happening. And I think that's what Trump wants. I don't think he wants to be the reserve currency anymore. We've talked about that. So it'll be multipolar where everyone holds their gold within their own borders for the most part. And the Western system that has been trusted, the moral high ground that we've trampled on for a long time now, is being viewed such as maybe it's not the best place to keep it there anymore. Let's bring it home and stay and get in touch with our own monetary affairs. And that's what is happening. So on top of them all buying it, they're all bringing it home and repatriating it and standing for delivery, because it's very important, I think, in a world where sanctions and threats become real, gold makes these countries immune from that by holding it themselves and integrating it into the system, replacing.
What's unfolding right now is not a price spike. It's a structural shift. Corrections will happen. Volatility is inevitable. But history shows that when confidence in paper systems erodes, tangible assets reassert themselves, fast and decisively. The smart money doesn't wait for headlines. It positions quietly, years in advance. So the real question isn't whether silver will move. It's whether most people will realize why it's moving only after the repricing is already underway. Let me know your thoughts in the comments. If you found this analysis valuable, support the channel, subscribe, and turn on notifications. See you in the next video. Is this conversation helpful so far?